Hello, this is Bob Joyner, and I'm recording this on Monday, February the 3rd, 2014. And what I want to talk about in this short video is what's called the 10 o'clock box. Now, I cannot take credit for the name or the idea, and I'm not sure where I first heard about it, but it's a valid idea for looking at support and resistance both in the market and individual stocks. And this is more of a day trading strategy for trading stocks. So just to go ahead and tell you what the idea is, you can probably tell from the name, but what we want to do is we want to take our drawing tool down here and we want to look at the first 30 minutes of the market, and we want to just make a rectangular box, square box, whatever it is, and just look at that period of time. So for example, this is on Monday and we're looking at the price movement of the SPY on a 2-minute chart during the first 30 minutes. You can see 4 o'clock, Friday's close, and then I've drawn it to the low of the day, to the high of the day, and just made a little box there. Now, of course, you can take the tool and you can extend it out for the rest of the day as the market continues, just to kind of have that idea in mind. But we're just going to keep it here just so you can see the 10 o'clock box. Pretty straightforward idea. We take the highs, the lows, in the first 30 minutes of the market, and we just make a box. Now, the basic idea is this. First, the philosophy behind it is this. In the first 30 minutes of any trading day in the U.S. market is critical because the market is having to digest a lot of economic reports. In this particular time, we're also during earnings season, so it's also digesting earnings reports from companies both small and large. And it's also, since it's Monday, it's digesting events, world events from over the past weekend. So there's a lot for the market to sort out, especially on a Monday morning. And obviously, the news was not good, and the market has continued to go lower. Now, the basic idea behind the 10 o'clock box for both the market and for stocks, individual stocks, is that you want to trade as a price breaks out of the box. So for example, after 10 o'clock, we can see, we just pull this line forward, we can see that right after 10 o'clock, we really break out of the box and we go down, and we've been staying below that 10 o'clock box all day long. And you could, of course, draw trend lines at this point, and say that, from that point down, we've been trading lower pretty much, well, not pretty much, we've been trading lower all day long and staying in this downward trend line as we've been breaking through some key support areas in the overall market. So just to get that line out of the way there for us. So that's the basic idea. You can use it for the market, you can use it for stocks. Let's go ahead and look at a couple of individual stocks and see how it would have worked out today. KTOS, for example, is one that was on my list this morning. So we can go and we can take the drawing tool and we can say, okay, from 4 o'clock, this is a gap up stock, obviously. We want to draw the box down to 10 o'clock. We can see what happened after 10 o'clock. There's also a 38% fib line. There just happens to be a 38% fib line that also broke below at that point, which is critical, of course. But you can also see what happens after it broke below that 10 o'clock box. It's been moving lower all day, and of course, even though this is a small price stock, these price movements are pretty large. So that would be one example. CTRP was another one that I had on my list today in the chat room, and you can take a look at that. Also, draw a 10 o'clock box here. Down, and you can see what I'm doing. I'm just taking the first 30 minutes of the market while the market's sorting out which direction things are going to go. And you can see what happened here as well. We stayed below that box. It came up and debated a couple times, but again, a nice big pullback after price breaks out of that box. Now, normally you want to trade in the direction of the trend, of course, of price. If the market, like SPY, if you're using that as a tool to gauge the market, if you want to look at that, then you would want to primarily trade in the direction of the market breakout of the box, obviously. So here's another one. This is a gap down, of course. We can draw the 30-minute box here and down to there, and you can see where we traded within the box. So this is kind of like a mixed area. You wouldn't want to take it, but then as you can see later in the day, much later after the market broke down, this pair finally broke down as well, and you can see the nice big pullback on that one. So that would be another example. I'll just give you two more examples, one of which will be a long breakout. But here's ACAM this morning again on my gap list. Let's draw the box here, and we would start with the high of the day up here at 4. Friday's close, it gaps up, as you can see this morning, and we draw the box, and again it debates that, and then boom, it breaks below the box and below Friday's close and just continues to fall lower. So again, another example, and I'll just give you one more that actually was against the market. Even though the market went lower, this stock actually went higher, and we can draw a box on that one as well. And we're just going to draw the box from the low of the day, 10 o'clock high, around in there. You get the idea. Again, you can just simply draw lines, at the high of the day and the low of the day, but I like the box idea because you can just take that and extend it out, and you can see how that top line of the box there at 10 o'clock kind of became support over and over again for this little pair, and you could have played little loops up again. And so anyway, that's the 10 o'clock box. Pretty interesting idea, and it works pretty darn well. Pretty simple idea for support and resistance. But again, you always want to start with some sort of a market indicator, such as SPY, looking at that ETF as a directional indicator for the market. And generally you want to trade, of course, in the direction of the market trend. So if you're trading in the direction of the market trend, then you would break below that box, and you'd be looking for stocks that are also breaking below their 10 o'clock box. So hope that idea is helpful for you as you day trade the market.